Hello everybody, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion on the local, national, and global economy and how it impacts your personal financial health and wealth. Now here's Taking Stock, episode number 69 with Art Jarvis. And once again, Art, welcome.
Yeah.
It's good to have you with us.
Good to be here. How you doing, my friend?
I'm doing great.
Glad to hear it.
And I know I'm gonna give it up.
Yeah.
For the listeners.
Mm-hmm.
So, Grandpa.
Yeah, I'm doing extra fantastic today.
Right?
Yeah. Yeah.
Absolutely.
It's been a good. What? 5 days? 6 days?
About 5 days.
Yeah.
Yeah,
So, yeah. 6 days.
Today's
Yeah.
the 24th. So.
Yeah. So it's been fantastic.
The world welcomed Arthur James Gepfrick
Yep.
on March the 18th.
Correct.
The first grandchild, the first grandson, and the firstborn to Caitlin Jarvis Gepfrick and James.
That's right.
And so Arthur James.
That's right. Poor kid. Got part of my name in there. Yeah. Poor kid.
He's pretty good.
He's already in trouble.
That's pretty good. After Grandpa and after Dad.
After Dad. Made all the sense in the world, yeah.
That's pretty darn good.
Quite an honor. I was touched.
I thought it was pretty cool. Caitlin, I thought that Caitlin honored her father in a good way. So anyway, well, welcome to Taking Stock number 69 with Grandpa Jarvis.
As they say, Artie's grandpa. Okay, yeah, I lost my name. So.
Well, you know what? I have to throw this out. I already told you, offline. But if Caitlin gets to listen to this, before I saw the post, and I think it was Caitlin's post on Facebook, and I think Sue saw something first, and she said Arthur James. I said Artie J.
Artie J.
And then lo and behold, Caitlin. We saw your post, and you guys had. I said, I probably shouldn't say that. Well, then I found out you guys are already. We got Artie J. So it's Artie J or
AJ.
Or AJ.
Yeah, I think Artie J might become a thing. Actually,
it could be. I like Art. Obviously, it popped right out of my Artie J, man.
Artie J. And now but I was Artie until my 8th grade year. So and then I spent a couple months as Art. And then I just became Jarvis. So
I was going to say, then they closed the gallery and you were no longer Art.
Yeah, that's right, exactly.
Like that.
That's right. Yeah, but I have a bunch of places still named after me. But,
the art exhibition came to a close.
Yes. And
then who are you after that? Just Jarvis?
I'm Artie's grandpa.
You and I, we won't bore the listeners with the evolution of who we are from. But anyway, we'll talk about it.
Artie is the next generation. I mean, of course, I'm getting a little ahead of myself, but next generation of Jarvis Global Investments. He already has a title. He's the CIO of Jarvis Global Investments, which is the Chief Inspiration Officer. How you like that?
I like
that?
and I'm sure when Artie J is able to comprehend that, he will like that too.
That's right. Is that just waiting for him to start trying to get
That's a pretty good legacy for, an infant, is to be the inspiration.
Yeah. So
that's
that's good. Well, you get what that means.
Well, let's see if we can inspire the listeners to stick with us through the rest of this episode.
Nice
talk,
segue.
Money,
oh,
right?
Yeah,
money. Sing it.
Money.
Yes, sir. That's what we're here about. The economy, the money in the economy, the finance, your wealth, everybody that's listening. And so I said to you, are you ready to talk about, because the economy has, kind of taken a little bit of a turn. Mm-hmm. You never know for sure, but, what are the indicators, and should we talk about some different things? Maybe now's the time this is my question to you, is now the time to maybe take some profits if the market's going to, drop a little lower? What do you say?
Yeah, I think even more so 2 or 3 weeks ago, we were actually taking.
Got to get ahead of it, but now, but still, I mean, how about this? We always talk numbers, so where are things as we sit down here at Tuesday afternoon, the 24th of March.
Yeah, we are almost on the. If you look at the S&P 500, we're almost down 300 points from where we started the year. So we started at 68.45. We're at 65.62. So we're almost 300 points. So 4 points up. We're down 4 points on the percent for
less
this
than
year.
5%.
But it feels. I think the interesting thing is I think I get a lot of comments like, hey, I checked my portfolio and it's like it wasn't near as bad as I thought it was going to be. And it's true. It's like some international stocks have done better. And one of the things we did do toward the end of last year, beginning of this year, was start taking some profits out of the technology sector and some other sectors out of the U.S. market, moving some of those to higher dividend yielding stocks, moving that to international stocks, which I'm still pretty positive about in spite of everything that's going on. So so to answer your question, it was and probably still is not a terrible time to lock in some profits and make some adjustments. And I'm not saying run away from the stock market, but it's probably, there are a number of sectors, first of all, that have been neglected for the last couple of years. So it wouldn't hurt to go toward those. It wouldn't hurt to go to more, I'll use the word secure, higher dividend yielding securities right now. And that kind of makes, and then the other thing is even at the beginning of the year, the international sectors look way better than the U.S. market. So, if given the opportunity, number one, if we get, like yesterday is a great example, we had some positive comments that may or may not have been true, but it made the market jump up about 2.5% in one day.
Positive comments regarding, discussions with Iran.
We're going to take a 5-day postponement and not blow up their oil assets and things like that. That's
not obliterate their power grid.
Precisely, which would not be a great thing. Then you also had comments about, based on positive things coming out of negotiations with the Iranians. So it's like, okay, good, at least they're talking. And then by last night, you're getting stories that, supposedly the Iranians are saying, not only are we not talking, we're not talking directly or indirectly, right? So that's put some pressure on the market. So there's a lot of iffy stuff going on right now. The technical term. There's a lot of uncertainty.
I'm scratching my head. And I love it. There's the uncertainty. Can't be certain.
Yep.
About this. But I am scratching my head when the President of the United States says we're going to take a little moratorium, 5 days. We're not going to obliterate the power grid. We're having, and he went as far as to characterize it, very good talks with Iran, and compared to historically where, the talks didn't mean anything, they mean something this time and they're serious about it. And I can't for the life of me figure out why does Iran come out within hours of that from the President of the United States and say, we're not talking directly to anybody.
Right.
And then ultimately hinting at the idea there are no talks at all happening.
Well, one of them is probably telling the truth. You got to figure out which one, but they're both probably coming at it from a negotiation standpoint. There are benefits to each side. There's a benefit to the U.S. saying, hey, we're having some good discussions, and there's a benefit to Iran going, we're not even talking to anybody, right? So,
well, the tyrannical terrorist leadership of Iran,
yes,
as we know it. I mean, this is just Chuck's thought on it. The hypothesis, great word. So I will hypothesize that the reason that the Iranians say we're not talking, they don't want the people in Iran to relax. Yeah. They want them to still feel the stress. Don't come out on the street or you're dead.
That's part of it, I think. Yeah. Don't worry about it. We're not worried. Yeah. We're not worried enough that we even want to talk to anybody. But maybe on the sidelines, it's like, we are talking to somebody. We're just not going to tell you that, So, once again, uncertainty. That's the problem.
Well,
right?
It brings us all the way back around because we want to stay, on topic in terms of the money and the economy and what it means to my portfolio, your portfolio, and those of you listening right now, your portfolio, your financial health and wealth. So, we talked a little politics there and what's going on in the world, but at the end, it comes back to the uncertainty in the marketplace, yes?
Yes, 100%. Yeah, and this is one of those cases where I get it, right? I understand the uncertainty this time.
Yeah.
Sometimes you're like, okay, everybody's overreacting. I'm surprised people aren't reacting more right now than they are, to be honest with you. We've with tariffs last year, we dropped the market 20% in a month and a half, right? And the economic numbers look great, and it's like, you already took 20%. How bad do you think we're going to slip into a recession? Well, guess what? Number one, we never slipped into a recession, and number two, the market went up 30-something% off the bottom in April. So, and then here we are talking about, they're throwing numbers like $150 or $200 for a barrel of oil, which is not a good thing in any way, shape, or form if that were to happen. But yet here we sit, the market's down 4.5% or something like that. International markets probably have now slipped to negative territory, but only by a little bit. High dividend yield securities have probably done the same thing. They've slipped to negative, but it's nowhere near 4.5%. So, it is a little surprising to me that the reaction has not been more severe, which I'm happy about. But also at the same time, there's a lot of new money coming into the markets and things like that. If they want to pull the market back, even if we pull the market back 10%, in my world, a 10% pullback's a normal pullback, and that's also once again an opportunity for opportunity means,
get in.
Yeah, volatility means profitability, right?
Right. Yeah. That's what Art Jarvis taught me.
So
that's what Art Jarvis has taught. If you've been listening.
It's
volatility equals opportunity.
It's a blue light special. I can't tell you that if we buy things at a 10% discount, I can't guarantee you that it won't go down further, but I can guarantee you we just bought stocks at 10% less than what they were at 4 weeks ago.
Well, then when it climbs back up, it'll pass that mark.
You come back faster.
Hopefully.
Yeah, exactly. So, again, it all falls into what's the individual client's risk tolerances and time frames and liquidity needs. That you got to take all that into account. But if it fits their overall investment strategy, most certainly. Do I think, knock on wood, do I think that we're looking at the end of the world? No. Hopefully this ends up being a Gulf War situation, back in 1991, where we spent whatever that is, 3, 4, 5 months. But guess what? You found out what happened, you found out where we are, and we got back on trend. So hopefully that's the way this ends up. We do have to get oil flowing again. There's no doubt about that.
I was going to say, so you beat me to it, because that was, what is the greatest concern? And it's the flow of the oil.
Yeah, we're paying $3.50, $3.60, $3.70 for a gallon of gas. I think that's what it was last night. Okay. So that diesel.
And in Ohio, for some reason, we are among the lowest in the nation. Yeah. Thankfully, since we actually live here.
Yeah. At the moment. Yeah. A gallon of diesel is just called $5. That's not good. There's a lot of trucks out there running on diesel trying to deliver product and things like that, and so does that put more upward pressure on inflation, and inflation numbers that we've already seen for the last few months tick up a little
slightly.
bit. Yeah, slightly, nothing huge, but it's not dropping. Let's be clear about that, right? And then the other thing, we mentioned at the end of the episode 2 weeks ago, or whatever, a week and a half ago, you're also looking at gross domestic product was running at 4+%, and the last number was 0.7. So it's something to keep an eye on. So,
well, can I say, and I'm asking this for real, yes or no? Can I say so that the Fed chairman and the board are there to control, to manage the inflation? Mm-hmm. Is that an accurate statement?
That's their job. Yes.
Right. Okay.
Yes.
And I want to make sure that
that's one of their jobs. Yeah.
So the Fed board, the Fed chairman, are in place. So what is going to be the impact of the changing of the guard on the Fed chairman?
So it's interesting. Number one, I'm going to add to what you said.
This is you speculating.
I didn't get a phone call from any of them recently, but I will say the other job of the Fed is to provide stability in times of instability. So that their job is to come out and say, yes, we don't like this, but we got this. Okay, if this happens, this is what we'll do. Calm everybody down a little bit, right? Okay, but so it's interesting that Fed Chairman Powell did come out here in the last week or two and say he was going to stay on the job until probably Kevin Warsh is appointed or approved or whatever. So he's not. So we're not going to have
is approved.
Yeah, we're not going to have a void at the Fed Chairman position until this happens and this happens. So he said he would stick around. Now, whether that makes people happy or not, that's up to them. But
there will be at least one person we know that wants the approval, the confirmation to move quickly.
Yeah, sure.
Of Warsh.
Yeah.
Unfortunately, and we don't want to get into that whole political discussion again. I'm sure you've heard the rumblings. I've heard the rumblings. There are those on the other side, of that issue that are like he's not going to be confirmed. We're not doing the
Well, of course, that's exactly what they're going to say, right?
Yeah, that's why I said we're not going to get into a deep political.
Once again, everybody's negotiating all the time, right?
Right.
So there you go. But and again, I've mentioned before that I believe in a strong Fed chairman.
Right.
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 I also believe in a mostly autonomous Fed chairman too. I do see the benefits of a separation between the Fed and the other
whatever other branches
of government, right?
The executive branch specifically.
Well, that and the legislature. I don't want a bunch of congressmen going in and telling the Fed chairman what he should be doing. Okay, I mean that's the way I feel about it. They're smart people, but they're I'm a stay in your lane kind of guy. So.
Well, I'm glad you added that caveat of stability there. That's where I was aiming for when I said it's kind of his job to manage inflation, but it's to provide stability where there's an unstable marketplace. And I think I'm glad that you added that, clarified that. It's important to think about it that way as opposed to like manage inflation. That's there's a lot more to it than manage inflation.
Yeah, a lot more to it.
Yeah. In terms of keeping it's keeping calm during the times of uncertainty, right?
Yeah.
So
100%. And then the Fed has a list of tools that they can use to do that. Okay.
Sure.
So, but the problem is here recently is one of the tools maybe they can use is to lower interest rates or decrease bank reserve requirements and things like that. Make the flow of money a little bit easier and things like that. So the problem is now you're looking at gross domestic product that's slowing down substantially from where it was a couple of quarters ago, and you're looking at inflation just kind of starting to head the wrong direction. It's moving up. And we talked about this last year. I stated multiple times I didn't understand why we were lowering interest rates. Okay.
I was going to say when you're talking about one of the tools is lowering interest rates, which over that last 12 months is something that Art Jarvis was like, I don't want to see us lowering the interest rates. It's not necessary.
Yeah. And don't get me wrong, I'm no master economist. Okay, I have a good sense of how things work.
How many years do you have to put in
to
earn that master's?
There's a lot smarter people out there than me that doing the job. So let's be clear about that. But I think I got a pretty good grasp on the fundamentals of things. And when I see an economy that's growing at 4+% and inflation is it's below 3, but it's not really working its way down to 2 like they wanted. So why are we raising rates? And then you sit here and go, okay, now we potentially have you start to hear that stagflation term,
Yeah.
which is not a great term. Now you're talking about a slowing economy and inflation. That's not a good place to be. So if you have inflation, but now the Fed wants to lower rates, well, does that help the economy but cause inflation to heat up again? Right? So there's a game that the Fed has to play, and that's why they're smarter than I am. Okay, they have to maneuver within a whole lot of different variables, right? So that's why, kind of last week I was like, I just kind of described it as maybe some storm clouds on the horizon,
Right.
Does it end up being a storm?
Which, by the way, thank you. That's a great headline.
You don't like that? It's right. And every once in a while.
Yeah.
But so do we get hit by a storm, or does that storm just kind of dissipate and we end up okay? That's the question right
you
now.
and I, as we sit here, are both on the same page of want to see those clouds break apart. Mm-hmm. We don't want to see a big, strong front come in. But, getting back to discussion of, is now a time to maybe take some profits. That doesn't mean like sell off and go put your money in the mattress.
Right, definitely.
Right? So what are some of the things that, and again, this is by no means for you listeners the advice of Jarvis Global Investments saying this is what you should do. What you should do, Art, is talk to your
investment advisor and see how it fits in with your overall investment strategy.
But the problem is you're sitting across from some guy hosting the show who's a journalist, and apparently a podcast show host. So he's asking, what are some of the things that you would recommend in terms of what are some of the avenues to maybe pull some profit from your portfolio right now? What do you do with that? Like if I said, hey, I'm listening to you talk about that. I heard you talk about it 2 weeks ago a little bit and something. Well, maybe I should take a little something out. What should I do with that?
Yeah, I mean, it depends. Again, it depends on where you are from an overall strategy standpoint. But if you're more on the aggressive side, I'd pull things. Technology stocks have done fantastic for the last 2 or 3 years. So where we may have started with a 6 or 7% position, and we might be at 10, 11%. So there's no reason not to maybe take some money off the table. And again, I'm a big fan of if you can take your money off the table and now you're playing with the house money.
Right.
I'm a big fan of that. That's great. So now, especially if you doubled your money, now if you take half of it off the table, take your money somewhere else, right? So, but again, it's kind of those things like international stocks, high dividend yielding stocks. I think, to get even more targeted or specific, you're looking at like aerospace and space and defense stocks. I mean, I had this conversation with a client yesterday. It's like, the space race is a thing, and it's not going away. Okay,
and that's an amazing thing to me because I think most of us walking around on the streets are not thinking that there truly is a space race continuing today.
Yeah.
We think of that was, I'm sure that there's a whole bunch of listeners that hear this taking stock episode. They're like, what? Because they weren't here in 1960s.
Right, yeah.
But I was. You touched on it. You're younger than me, so you barely touched it.
My parents sat me down and told me to watch it.
Yeah, but anyway, there are too many of us maybe that are thinking, that was the space race. We won it, sort of, and then it's over. It's not over.
No,
So
you're talking, and the Chinese right now are way ahead of us. Okay, so we got some catching up to do. Number one, and again, I'm not smart enough to tell you exactly where, but if you're going to colonize the moon, I'm assuming there's specific places on the moon that you want to colonize as opposed to others, right?
Sure.
They're more strategically, and where you are, which satellites you have up in space and things like that. You have NASA and the Artemis program, which I love the name, but they're getting ready to go to Mars. Right? They're working on going to Mars, so that's a whole other thing. But you talk about the weaponization of space and things like that. It's a thing. Okay? Whether we like it or not, it's a thing. Okay? So that's the next step for So anyway, and we're going through our arsenal like crazy right now of missiles and things like that. So those have to be replaced. And Trump was elected last year and took office in January. The aerospace and defense sector of the market is up 50 to 70%, depending on when you bought it. Okay, it's been very strong. Okay, and I just don't. I don't see that letting up based on where things are going. But, from a more conservative standpoint, I would definitely look at the higher dividend yielding stocks. I would definitely look at international stocks. If you're a more conservative investor, we've had interest rates basically go in a very short period of time, basically go from 4%. We were almost at 4.5% this past weekend. Okay, so that's your opportunity to maybe lock in maybe a little bit longer term bonds and get a little bigger dividend stream coming off of it. So yeah, there's a lot. Again, it depends on every single individual, where they are from a risk tolerance standpoint, things like that. Me personally, I'm a very aggressive person, and if they want to take 10% out of this market, guess what? I'm buying.
Right.
Okay. And if you're a young person, this is, knock on wood, I most certainly hope this is not the end of the world. This is your opportunity to pick up some bargains, and you get to benefit for the next 20, 30 years. So, yeah.
Well, so clarification, like I said, when we're talking about this and we say, maybe now's the time to take some profit, it's don't go get cash and put it underneath your mattress.
Certainly not.
Because, and again, I think the key thing is, it's move it.
Mm-hmm.
It's not take it, so to speak, really.
Money under your mattress is never a good strategy.
I hear you.
Okay, let's be clear. I hear people say it all the time, but that's never a good strategy.
Fair enough.
Okay? Yeah.
Fair enough.
That's the banking system.
I got a jar full of pennies, just add to that.
Yeah, you melt those down and do something with them.
But as we're getting to the close of this episode number 69 of Taking Stock, just a couple of minutes remaining. What are some of the calming words? What are some of the calming numbers? It has really stuck with me, Art. Mm-hmm. You're a numbers guy. You're looking at the numbers to see what the indicators are. So what's the calming news that you could share with those listening today?
Corporate earnings still look good.
Mm-hmm.
Interest rates, even though they're kind of bouncing around, they're still in that 4 to 4.5 range. Okay, so we're not jumping up to 6% interest rates or anything like that. So your market multiple still is remaining reasonable.
Yeah.
So you start to do the calculation of where you think the market could be in the next 12 months. Things calm down, we get oil prices down, everybody calms down, stops blowing things up. We could easily be at that, 75, 7,700 on the S&P 500. But as always, the big consumer is 70% of gross domestic product.
Right.
The consumer's got to stay in it. And if all of a sudden they're paying $4 or $5 for a gallon of gas, you're going to start to lose the consumer, right? But I know that's not the positive side of the equation, but at this moment in time,
well, that's just an honest analysis, though.
Yeah.
Yeah. So.
Yeah, there's a lot that could happen. What's the probability of it happening? That's
so then we're sitting here talking about who's going to win the NCAA, because we can sit here and speculate all you want.
Yeah.
Wouldn't it be great to just do a sports show, because you could talk about all this stuff.
Yeah.
And then at the end, it's just how does the game end, and it doesn't kill anybody's future.
Yeah.
Wow.
Well, and those people I talk to, their brackets look terrible. So, but that's kind of been the thing for the last few years. Like, boy, you get through that first weekend of basketball, and you're like, look, it looks like a 5-year-old filled it out. So, but you don't want me talking sports for a half hour, so. I'm better off talking.
Well, it's just pure speculation, because they don't know.
Well,
I don't know until the game's played.
Yeah.
Hey, this guy's going to pitch. Oh, wait a minute, we just found out at game time he's got a blister on his, throwing finger. Whatever. But
there's a reason they play the game.
Well, and that that's a great place to wrap up episode number 69. There's a reason you play this money game. For those of you listening, for Art and for me sitting here, there's a reason that we play it. And you just do the best you can, get as much information, make as many informed decisions as you can. And at the end of the day, you wait and see what the results are.
That's right.
So, anyway, some calming news is, there's some still good, the consumer price, so on. The consumer's still in it so far.
Still got to win it. That's
You
right.
know, we won't talk about any more of the concerns. We covered them in 30 minutes.
There you go. That's right. We'll be fine.
Perfect.
No, I mean, if you want someone to say it, and we'll be okay.
All right.
You might not enjoy the ride, but we'll get there.
All right.
So yeah.
Well, Art, you did a fine job.
Well, thank you. You mean Artie's grandpa?
Artie's grandpa.
That's right.
Well, listen, and all kidding aside, congratulations on the newest member to the Jarvis Global family.
Thank you.
And especially congratulations to James and to Caitlin
Thank you.
and to Artie J.
RDJ.
Came in happy, healthy, 5 fingers on both hands, 5 toes on both feet, a cute little nose, and a happy smile,
And
right?
then don't forget Grandma J.
Oh, Kim for sure.
Yeah, she's a happy camper right now.
Congratulations. I'm sorry we waited all the way to the end of the show, but we know that you listen all the way to the end, Kim.
Uh-huh.
So congratulations, Grandma.
That's right.
Enjoy. This is the best time of your life.
And there you go. That's what they keep telling me. I'm looking forward to it.
Well, hey, again, thank you for taking the time, Grandpa, to join us and share your insights into this global economy that we live in.
It's my pleasure. Enjoy it, as always. Enjoy it immensely.
And that brings us to the end of Taking Stock. So for now, I'm Chuck Gibson, and that is Taking Stock with Art Jarvis.